Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market and figure out what is happening today and what we can expect moving forward and into a potentially pretty massive and important week next week with that shareholder meeting and more importantly, really, the shareholder votes regarding, well, all those different aspects, but probably the main one, of course, is being the reincorporation, if you will, from Delaware to Texas. And of course, we also have that Elon pay package vote, which I'm sure is going to be quite a drama-filled events and week. But with that being said, let's just jump into it. Tesla closing the day up ever so slightly, 0.11% on the day, closing just shy of $175 per share. Pretty much the same close as yesterday. While the market absolutely went on a tear today, SPY up 1.2%, QQQ up just over 2%. So Tesla definitely a bit of an underperformance day, but the main reason for that underperformance, in my opinion, is because, well, it did start off the day with a pretty decent sell-off. Now, yesterday, we talked about how there was that whale 3 minutes before close. They came in with about a million or so inputs for this Friday. And like I said, if someone is coming in with that kind of money, either that's just literally means nothing to them or they know something. And no real news really came out, but Tesla in the morning did get that initial massive sell-off like I talked about, right? I said how, remember how I said how both whales can win? The whale that believes Tesla will go down to, pretty much, I don't know, 173, 2, whatever. It's somewhere, a couple percentage points down or so. But the whales that believe Tesla that were selling cash ticker puts will not end, at least this Friday, below 170. And I said both can win, easily both can win. If we have a massive sell-off, that whale can just simply exit on that and be up like a pretty respectable amount. That's most likely, I assume, at least what happened. Nice little sell-off in the morning. I'm sure that whale exited. And of course, well, pretty much the rest is history. So, that's kind of important to know, right? This is why when you see those kind of options come in, those kind of puts come in, it's probably not for nothing. Let's just say that, right? Just keep that in mind. Now, let's talk about the actual technical analysis first before we continue before we continue, I was reading something. Before we continue the options flow perspective once again. So again, we're trading within the same range. Now, the thing that's interesting that did happen today that is worthy of note is the fact that, well, we actually did breach that 173 level, right? We've held this level for quite some time. You can see here, ever since really this candle back here, 17th of May, right? We did actually come down to about 172.76. And ever since then, we have pretty much held quite well. And we've many times come down to this 173 range and bounced every single time pretty much, or at the very least held pretty decently, right? So today, we obviously held it still, but we did actually breach a little bit lower. We went to about 172.2 roughly, right? Now, what does this really mean? Well, there's, I guess, three perspectives, the third one being my personal perspective, and the first two being a bullish and a bearish perspective. So let's talk about both sides and how both sides, depending on your bias or maybe the positions you're holding or whatever, that you can perceive from this move. So let's talk about this, right? So first of all, we're actually closing a bit of a doji candle, but it is still, in my opinion, showing some indecision. Now, the fact that we did drop below 173, drop below all of these levels before, though, held pretty well, and we, essentially made a arguable lower low within this recent time frame. And from a bearish perspective, could be the fact that, yeah, we recouped it, but the fact that we still went below this level, the fact that we still broke below these levels is still a sign of weakness, and that's still going to be shown most likely moving forward because, well, the fact that we even breached that level to begin with shows that the sellers clearly are having the upper hand over the buyers, which is a valid, perspective. The bullish perspective as well, okay, yeah, we did breach below it, but not only did we set up massive bear trap, we recouped it, and it essentially ended up being a false breakdown. And usually false breakouts, breakdowns or breakouts, right, north or south, whatever, are good for the opposite directions. In this case, because it was a false breakdown to the downside and we recouped it back up and we did not close a daily candle below 173, you can argue as a bull potentially, right, that, well, it's a false breakdown, and that's actually a bullish reversal. So those are the two perspectives, in my opinion, you can look at. The third perspective, and this is what I personally look at, and this is how I'm perceiving it as someone that tries his best to be as neutral as possible and just kind of, looking at what the chart is telling me and just really, assessing it from there and not having a bias in terms of trading and in terms of the stock movement. I am bullish on Tesla as a company, bullish on, Tesla, Elon, whatever in the future, in 5-10 years from now. I'm very, very bullish, like extremely bullish, actually. I'm a massive bull, but it's important to remove that because the company and the stock, more often than not, especially short to medium term, are usually not the same. Long term, they meet. Right? Long term, even if there's a divergence in the stock price versus what the company is doing, eventually it will meet, for better or for worse. But in this case, short to medium term, they're usually not that correlated, if that makes sense. So you want to remove potential biasness like that. And, from my perspective, and again, as neutral as possible, the way I look at it as well, I don't really care. I don't really care that this move happened. Why don't I care about this move? Well, because we didn't close a daily candle below or above my important levels. Like I said many times before, a daily close below 173, that is where I'll be like, okay, now things are starting to get a little bit concerning for the bulls and definitely looking a little bit more promising for the bears. Vice versa, if we close a daily candle like we could not have, we didn't do it here, we didn't do it here, we didn't do the past several days as well. We also wicked above it and essentially had a false breakout to the upside. Same argument that can be made over here for the bears, right? We had a bull trap up here, we had a bull trap up here, we had a bear trap just this morning. So same argument could be made for both sides, but we did not close a daily candle above this green trend line yet. We're just also having issues doing that, which again, because it's a descending trend line, right? The level to break and the level to have a daily closure is also, well, descending naturally, right? As the days progress and as we continue consolidating. So essentially what that means is to say starting tomorrow, the pretty much even above like 178, you can already start making an argument, assuming, of course, we close a daily candle above 178. You can already start making an argument, the fact that we're flirting with a breakout here to the upside, especially, again, like I said, if you close the daily candle. That's the most important aspect, right? Very, very important. Now, that's the first level. Now, if you want to be extra conservative, if you want to be extra safe, right, I would personally still wait for at least a daily closure candle, at least above that 180/181 range. That to me is a little bit more safe. And if you really want to be safe, honestly, above like 183 to 185 is extra safe, but that's even more confirmation, right? And like I said, if we close a daily candle below 173, most likely coming down to this level down here at about 168 to 170. Below that, most likely coming back down to the support level that held several times, many times before, right? 160 to 163. To the upside, again, if we close a daily candle above any of those levels I mentioned earlier, so as low as potentially even 178, but ideally 180 to 181, and even more ideally 183 to 185, right? Each level is more and more confirmation. To me, in my opinion, the move to the upside over here to about $200 per share roughly becomes substantially more prominent and substantially of a higher percentage that it does happen. So those are the things I'm still looking at. Now, with that being said, taking a look at other indicators, right? We still have the MACD definitely showing some signs of weakness. Stochastic over here, you can see definitely still showing some signs of weakness, right? We definitely would want to see the green cross the red, for instance, to kind of regain some potential bullish momentum. So until then, in my opinion, Tesla is losing a little bit of steam here, right? The weekly time frame, obviously we have 2 more days, but you can see the stochastic still bullish, but starting to curl, that steam is starting to run out, almost like it needs to refuel, if that makes sense. So we'll see, of course. It's still technically bullish, so we'll see how that actually plays out. The MACD is also still bullish, right? So ultimately, I think the longer term trend is still bullish. It's just a question, at least in my opinion right now, is do we come down to 167 to 170 and potentially even as low as the 160 to 163 first before we continue that move up even higher, or do we just go straight from here? That to me is the question. Whether or not we do come down here first or we just go straight from here, the overall end result, in my opinion, is still similar, where I still ultimately think Tesla will have a higher chance to move up higher to at least $200 per share at some point. It's just, again, do we get that short-term movement to the downside first or not? And again, the levels to look for the confirmation, for those level breaks to really kind of, give a more valid, perspective and, percentage, if you will, for that respective move in that respective direction. So those are the main things I'll be looking for very patiently. And that's, it is what it is. Now, going back to my favorite indicator, especially on the 1 hour time frame, what do you know? Another example of, in this case, being oversold back to and reversion back to the mean. Many times over here, 2 times, right? We got overbought, reverted back to the mean. Overbought, reverted back to the mean. Here, we went into oversold territory on the 1 hour this morning. And what do? We bought it back up and we reverted where? Right back to that mean, that white line in the center. It's almost like clockwork. It just happens every single time. Here, back to the mean. Here, back to the mean, back to the mean, right? Oversold, overbought, oversold, overbought. It's crazy. I mean, granted, we are in a consolidation range, right? So obviously it's not going to always be this perfect, right? Naturally, this is just working really well because we're in a consolidation range. At some point, once the direction is picked, we will most likely be and stay overbought / oversold for a little bit more of an extended period of time, especially on the 1 hour time frame. So that is most likely going to happen. But as of right now, while we're consolidating, it's just like ping pong, man. It's just going up and down between those levels pretty much consistently, and it's been working pretty darn well. Now, let's take a look at options flow, right? Options flow, Tesla, you can see over here is the most bearish one. Only 12.5 million though, so it's not too crazy compared to like what a true bearish day on Tesla could look like. But this morning, a lot of puts came in on Tesla as we had that drop. Then we had that, of course, rally. Up to about the 175, 176 even almost range, right? A lot of calls came in, but in my opinion today, in terms of the calls and options in general, nothing really came out of note that I really care about. I mean, we had a 1 million pretty much call that came in here, but it's for 2025. It's pretty much a year route, right? So 160 strikes, so it's also in the money, so pretty safe. But the overall picture that I still see consistently happening on Tesla is the fact that if I do see any large prints like this, usually it's whales that are just bullish for the next year or two, which is still a trend. It's still happening, right? It's still something that is just consistently that I'm seeing essentially across Tesla. In terms of sold options, again, for Cheddar Flow here, by the way, like I said before, I do have a link to both of these option services down below with the discount code as well. So if you're interested in trying out any of them, definitely check out that link. But in terms of Cheddar Flow, these are sold options, don't forget, right? So, again, also today, nothing crazy. Like I said before, though, I did see a lot of sold puts for 170. So the whales clearly don't think Tesla's going down below 170 by this Friday, maybe even next Friday. But what I did see today is the fact that a lot of whales, I saw a lot of sold calls for 175, 177 and a half, right? So clearly the whales started thinking that we ain't going much higher than 175 by this Friday, and it'll probably close somewhere around that general vicinity. And I tend to agree. I think the real move is probably going to come maybe Friday, honestly, but probably next week once we get closer and closer to that date. It might be a sell-off or a rally into the news, and then it'll be the opposite move after, in my opinion, or it'll just be simply a sideways consolidation until the event happens, and then, well, we'll just have to wait and see to see how the stock reacts to it. But yeah, the squeeze meter is still, showing a squeeze being built up over here on TrendSpider, right? The TTM squeeze. So we're still building up a pretty massive move that's getting ready to explode on Tesla. So yeah, a lot of stuff is still building up. A lot of patience is still required. We had a bit of a fake out today, as we had also a fake out on the bullish side just a couple of days ago. So again, patience is required. We did have some pretty low volume today, so keep that in mind, right? So, which is pretty normal in consolidation, especially once we're getting to the peak, right? As you consolidate and go sideways like this, and the volume just slowly keeps decreasing. Once you have that massive spike, the volume should substantially increase, kind of like what we had over here on this massive volume spike over here. You can see the volume kept going down, massive move up, massive volume increase, and now we're essentially doing the same thing again, down on the volume until we got another candle like this to the upside or to the downside. So we'll have to wait and see. But the levels to look for. What I'm personally eyeballing. Again, if I absolutely had to pick a direction, I still remain a little bit more bearish than bullish. But again, nothing too crazy. And again, I'm just personally selling options. I'm enjoying the consolidation. It's boring, but my sold options are very happy with it, making some pretty free money on it, and I'm not complaining too much. So yeah, with all that being said and done, thanks for watching. I'll see you for the next one. Peace.